What is going on, guys? It is currently 11:04 p.m. on Wednesday. It is the Chapel Trader. We are back, and I'm recording this video super late at night. It's been a super long day, long but productive day, but I still had to get this video out. So today I'm going to be covering a trade that went break even, but really shouldn't have gone break even. And I will let you guys know what I mean by that in just a second. So as you guys can see from the screen, I did take a trade today. This was a break-even trade, although it really shouldn't have been. And the reason why it shouldn't have been is because I pulled up my stop loss into my break-even point. And because I did that, I actually missed out on a potential, let's see how many points this is, 123 multiplied by 5, that's at least $500, right? So I missed out on a potential $500 plus trade simply because I pulled up my stop loss into break even. Yeah, so basically what I was thinking is the draw on liquidity really only could have been a couple points, and I will show you guys what that looks like right now. Let's see. This is annoying. Yeah, so long story short, this morning I figured that the draw on liquidity really only could have been a couple points, right? So the first point was this marked out high that I have right here. The second point is this marked out high that I have up here. And then lastly, I did think that we were going to see some type of sweep of this low right here, which we did not get, but this swing did match this swing right here. So this is kind of an equal lows situation. So we saw a lot of bearish pressure for most of the morning, basically from 8:40 all the way until 9:45. And I know a lot of you guys took trades during this time, and that is awesome. It just wasn't a trade for me. I didn't see any trades that lined up with my strategy, but what I did see was this opportunity open up at around 10:15 when this gap started to inverse, right? So let's drop down to the 1 minute so you can see this in higher detail. If we are able to zoom, yeah. So as you guys can see, this started to inverse at around 10:18, 10:15 this morning. And as you guys know, I trade a very simple continuation strategy. So if you go on the 5 minute, basically all I was looking for was a inverse of that 5 minute fair value gap and then a valid displacement candle. So to me, the valid displacement candle that occurred was this candle right here. This is about like an 83 point candle that displaced out of this 5 minute inverse, right? So after this happened, I took my entry, and here's the thing, guys, this trade took so long to hit either take profit or stop loss, right? So let's count the candles. We have 1, 2, 3, 4, 5, 6, 7. So that trade took 35 minutes to hit take profit, right? So I guess, I don't know what my mindset was. I think I might have been scared to lose the trade. I may have been, a little bit unsure about my entry, which I don't know why, because this is a textbook trade. This is a textbook trade. We have an inverse of the fair value gap, and on top of that, we have a clear displacement candle towards previous highs. This is a textbook trade, right? So I'm not sure why I was nervous about this entry, but for some reason I was. And what happened is that, guys, I pulled up my stop loss into break even. Now, it's not the worst thing in the world. It could have been far worse. I could have lost the trade, right? I could have taken a loss, a big fat L on this trade, but I did not. It was just a break even trade. So it's not the worst thing in the world, but one thing I did learn from this is to not bring my stop loss into break even on a trade that is anything less than a 2 risk to reward. But as far as following the rest of my trading rules went, I would say that was pretty successful, because if we look at my trading journal, my habits for my trading journal, I have 5-minute inverse gap, which we saw, we checked that off, or a 5-minute standard gap, which, you know, we checked that off. A clear draw on liquidity, that was there. Clear displacement candle, that was there. And I added this one today simply because of the experience that I had today, you know, of bringing my stop loss into break even. So that is something that I'm going to incorporate into my trading from this point on, simply just not going break even on trades that are less than a 2 risk to reward. Everything else I followed, not trading, consolidating markets, risk management, market conditions, draw on liquidity, you know, everything here, you know, was followed, you know. And in case you guys are wondering about the consolidation piece of it, when I entered this trade, it wasn't consolidating. Here's what I mean, right? So this is not consolidation. All of this is displacement. It's not the best displacement in the world. Like, it's not, you know, something like this candle right here. However, it is displacement nonetheless, right? And it displaces out of a 5-minute inverse fair value gap. So this is a textbook and clean entry. This isn't a bad trade by any means, right? Now, if you entered, for example, way the hell out here, you probably got hit by this huge candle, which probably stopped you out. And that probably happened because you entered too late and you missed your entry. The good displacement candle is going to be this one right here. That was the right candle to choose, and that's the one I chose. And had I not pulled up my stop loss into break even, this would have been a $500+ trade, but it is what it is. You live and you learn. I added the new rule right here in my trading journal, and yeah, that is what we're going to follow from here on out, and that's really it. If you guys had any questions, concerns, comments, thoughts on anything that you saw in this video, please do let me know, and I would love to discuss that with you. All right, guys, this has been fun. This is the Chapel Trader, and I will see you guys in the next video. Peace.